Welcome everyone to this month's Money Gym Masterclass, where the topic we'll be talking about this month is Credit History 101. And this is a session which I know a lot of people have been looking forward to for a few months now, because actually, as a credit union, it goes to the heart of a lot of what we do. I think, there are lots of myths and misconceptions and misunderstandings around the credit history, the way the credit history system works. Hoping to cover lots of ground today, and I think the most important thing is we're going to leave lots of time for questions towards the end. So in the spirit of keeping things moving, I'll go straight on to introducing myself. For those of you that have attended previous sessions, my name is Ben West. I run business development at London Mutual, where I'm looking to working around constantly developing and improving our product services and the support we provide to our members. Also excited to, again, a familiar face for those of you that have attended previous sessions. Got Anthony with us today. Hi, Anthony.
Hi, everyone.
Anthony, as those of you who have been on previous sessions will know, Anthony is our head of collections. He's responsible for supporting members when there are issues with falling into financial difficulty, issues around members, supporting them to repay loans, and areas around things like that. So I think between the two of us, we'll have a lot of the information that you need, but really looking forward to answering your questions at the end of the session. I should also say a special shout out today to everybody joining us. I know there are a few people joining and watching from West London Mission St Luke's. So if you're out there, very nice you to join us today, and particularly looking forward to you being part of the discussion towards the end of today's session. So in terms of what we'll be looking at today, we're going to start by looking at what actually is your credit score, and often lots of the terms around credit score, credit history, credit file get used interchangeably. So we'll be looking a little bit about what exactly each of those things are and why they matter. We'll be talking a little bit about how your credit score is recorded and measured, and where you can find out what it is. So some of this will probably be a little bit more familiar, but why your credit's important, and why the importance of maintaining good credit, ways to check it and keep track of it. And then probably we'll wrap up just by talking a little bit about some of the kind of hints and tips for things that can help your credit and things that can hurt your credit. And then we'll go straight into a Q&A where hopefully we'll be able to answer a lot of your questions today. So without further ado, Anthony, a bit of a personal question, but what's your credit score?
How dare you ask? No, generally, I think it's one of them conversations that we don't have. It's very taboo. Like, I know probably my partners and my credit score. I would never ask my brother or anybody in my family or close friends. I can be honest, my credit score over the years is early teens and early 20s. Definitely wasn't the best. It was money. Let me take a credit card here and there. Oh, that's a store card. I can buy clothes. And so over the years, it's probably from my early 20s going into my early 30s. It probably started non-existent, about 200, and now I probably have it up to about 575 to 700, depending on if I'm remortgaging or took out a new credit card or anything like that. So it's got to about a healthier stage, but I'm happy to talk about what my credit score is. It's it changes.
As you say, it's a very personal one, and I think it goes up and down. I'm not telling you mine, but I think one of the things I think that strikes me is that actually probably until fairly recently, I'm similar to most people in that I probably wasn't checking or looking at it particularly often. Recently, my bank added a new feature within the app that allows me to look at it. So that means that actually it's probably it's less of a sort of a scary, mysterious thing now. And I think hopefully that's starting to change as people kind of get to the habit of checking it more regularly. So it'd be good when we talk about ways that people can do that. But I know that, I think myself, looking at perhaps sort of starting to perhaps get a mortgage within the next few years, and so actually starting to look at my kind of credit score and keep track of it and the things that affect it from month to month, I think is becoming, I guess, an important part of things. So it's probably a good place to start. So did you want to start off with the general kind of summary, the cuts and chase, and give us the overall definition, Anthony?
Yeah, no, definitely. I think it's to start off with, people go, what is credit history? And as you sort of just pointed out, I think until the pandemic and in the last couple of years. I think we haven't really spoke about that. It's it's not a conversation that you do have. And I think when you go, oh, actually, what is my credit history? And now I'm looking. When I first looked at it, I didn't have a clue. I was like, oh, there's loads of numbers and different colors and it looks thing. So basically, your credit, it tracks your reliability and the ability of you as a borrower, whether you've borrowed a loan, a credit card, a store card, anything that you've had to borrow, or any term of lending. It's an up-to-date financial record of yourself. If that gives it an easy, it will show patterns. So if you're more likely to apply for loads of credit cards, it will record the patterns of actually your spending patterns. It will show your history will basically show your utilization of credit, of how much credit you've used in the last year. We'll get onto them a little bit further and stuff like that. Most of the time, I think with credit history, and I think most of the people that will be watching, and a lot of the thing is we actually don't look at the history. We try and look at what's now. And I think one of the key factor is actually, if you could look at your credit history, you can understand, your financial situation and what you've done at that time to what you're doing now. That is your credit history. You are showing your patterns and your history around, when I was in my early 20s, for instance, I used a lot of credit. As I've got older, I haven't used as much, but I still use credit. So that is your credit history. It's an up-to-date financial record of yourself and your credit.
No, that makes sense. And I think, one of the things which I'm keen for us to do today is to try and get rid of some of the kind of some of the sort of the guilt and stigma that sometimes come around this sort of topic. Having a poor credit score, having a less than ideal credit score, this isn't a measure of whether, you're a good person or a bad person or your character. I mean, there are all sorts of factors that are going to make it, in some cases, some cases your credit score is going to go down. Sometimes your credit score is going to go up. And I think actually what today is about, it's not about sort of, it's about taking away some of that moral judgment and actually saying these are the factors that influence it. This is how you can take control of it, and this is how you can be a bit more aware of it. Because it's true that sort of having a better credit history is going to give you more options, but we're also aware that sometimes life gets in the way and that it's going to go up and down. So it's about understanding how it works so that you can make it work for you.
Definitely.
So we've used a lot of the kind of the terms around kind of credit history, credit score, credit reports and files. We've sort of used them interchangeably so far. So just to carry things on, Anthony, can you help us sort of unpick what each of those things are and how they're different?
Yeah, definitely. So I think the first one that we always see is we just spoke about is the credit history, sort of a bit, that shows the track of the recording and the keeping of the repayments of your terms and conditions of whatever credit you've got. And as we sort of said, some people think, one of the most recent ones was Klarna. All of a sudden now that's coming on to people's credit files. People didn't know that, actually you'll pay now, buy later. That's credit, that's going on your credit file. So whatever your terms and conditions are to whatever agreement you've signed, that is your credit history, and it's the patterns around that and repayments. I think the next one, credit score, is the one we all sort of the first thing that you see whenever you go onto any of the apps or any report. It's the big number at the top, 3-digit number, and it says this is your credit score. A number between 300 and 850. I think some other platforms may verify, but in the grand scheme of things, that is normally where roughly your credit would sit at. And then generally that gives you a basis of whether you're a high risk lender or a low risk lender. And it basically gives borrowers the opportunity to see where you're sitting with that score. And then the other one that I actually knew nothing about until there was an error when I was very young, that there was something on my credit file that I didn't know. And I thought, well, I've got a credit score. I've checked my history. What's wrong? Why are you not giving me that extra store card? And it was, it's basically a credit file, and a report is a continuing file of your credit activity. It's a full statement from start to finish of every loan repayment you've ever made, missed, might not have missed, if you've taken a payment holiday. It is a full-on basically it's an activity report of what you've done from start to finish. Normally they kick in from about the age of 18, that they start from whenever you can sort of purchase credit in the UK. So yeah, so mine's several pages long.
So it's sort of just to summarize that. So obviously we often just sort of think of this as, as a number, as that score, but actually below so the score is almost sort of sums up. It's putting a number, isn't it, and quantifying what's in your history and what's in your file. But actually beneath all of that, it's a full history of everything you've ever borrowed. Did you repay on time? How much of your limit did you use? All of those are factors which go into creating that sort of that number on your credit score. Is that right?
Yeah, definitely. It's more of it's your current situation now. So that file is going to give you an updated file of where you are currently sitting at the moment, and that will link into your score. The one good thing about a credit file is that it records the history. So for instance, life gets in the way. The pandemic for everybody was a little bit up and down with all different types of circumstances. There is a massive dip nationally in everybody's credit files, and now you can see them repairing again. So that is what the file will do. It's the start to finish, and it sort of just sits there in the background, and it's always handy to check. I would always say, always read through and just double check.
So I guess the sort of the next obvious question is, okay, so all these things exist, all this information is being kept about me, and I might not even have known that the information was being kept about there, but somewhere out there is a credit score, credit report, credit file, credit history for me as an individual, and probably for pretty much everybody on this call, assuming you've ever borrowed, you'll have a credit file, credit score, credit history. So I guess the sort of the obvious question from that one, Anthony, is where is this kept? Who looks after it, and where do I find it?
Yes, I think now in these days it's quite confusing. I think we get put out, there's adverts, you can check your credit here, you can check here. Most places to check your credit score and actually keep a track of your credit is an app now. So you can do the online, but most your financial history you can find with Experian, Equifax, and TransUnion. TransUnion are probably a bit newer in the market. Over the recent years, they're coming more and more as one of the top 3 in the country. I wouldn't be scared of this either. I think this is one of the ones that, if we're going to have a conversation about it, it's don't be scared of it. You can actually register with all 3. It's not going to, it isn't going to affect you if you check your credit score with TransUnion and then in 2 months' time you want to check it with Equifax, and currently myself, I would check it with Experian and Equifax. I haven't used TransUnion yet. I would say that these are the 3 main lenders. The 3 main credit reference agencies that most companies would use, especially if you are looking for a long-term loan or and a substantial loan or anything like that. Most banks would be partnered with these. So if you're looking for anything for your bank or your credit union, most of the times that they're going to be checking these 3. I wouldn't say, I think the main thing for this is that, there is so many places that you can check it. There's no harm in going to any of them. That's, I wouldn't want to put somebody off going, oh, I use Experian, so you've got to use it. It's, what you have. It's just any service that you wish to use. It's not.
So if there's sort of one takeaway from today's session, it's that, if if you're not sure what your credit is, or maybe you've had problems with being turned down for credit in the past and you want to have a better understanding of why, or you're just curious to see what information these companies have got about you, you can go onto the website of all 3 of these credit providers. They've all got online registration where you can sign up for free, and you can see some basic information about what your credit score is with each of these 3 companies, and then usually it will give you some information about the factors that they've taken into account in order to give you that score, as well as often they'll give you some tips about things that you can do to potentially potentially improve it. So if you take nothing else from today's session, Google Experian, Equifax and TransUnion, sign up on their websites and check it out and see where you're up to in terms of your own credit. So once you're logged in onto the website, looking at the credit score, what sort of information are we looking at on there, Anthony?
Pretty much anything, as sort of we spoke about, anything that you've done with your lending terms and conditions to whatever it is will be reported on this. I think most of the ones that people forget is when you miss a payment, oh, I've missed a payment, but I've repaid it back. That's, you've gone into an arrangement to pay it, even down to the small print that is recorded. And then what that basically does, it records your collectability. Are you paying your bills on time? Are you, is there a specific pattern that you're going to see that when you log on there, you pay your bills at the beginning part of the year, you've had a problem in the middle, but then you picked it back up. As I said, missed payments, that's probably one of the biggest ones that people go, oh, I didn't miss that. So it's always handy to check to make sure that, if you have paid your payments on time and you have got a missed payment on there, you can always query it. And then I think one that we forget, and especially if you are going through hardship, let's all be real, we've all experienced it. We're probably 9 times out of 10, somebody's always, if somebody's going to go through a financial hardship at some point in their life, searching, credit searches, it's always there. Every time you do a credit search, it's there. Unless the company that you're with says, we are not doing a credit search, it's not going to be recorded. But 9 times out of 10, you're going to have, any time that you searched for credit or applied for credit, it will record that. I think most of cases that I come across is the address. If you've ever moved address, you tend to, if you've not registered in the electoral roll, your report's going to tell you that you're not registered anywhere. So it keeps a record of your past and previous addresses. I think with renting as well, it's always good to have your credit score and credit report looked into, because if there's been several people at that property in the years before you got there, sometimes stuff does cross over. So it's always handy, if you are renting, to always have a look at your credit file to make sure that you're not linked to previous addresses that are not actually you don't have any financial commitments to. And then most of the applications that you do make on there, phone contracts, car finance, payday loans, they will all show. So as I said, sort of to summarize that, any form of borrowing that you're going to take will show. And sort of as a touch base, financial links, especially, I remember being quite young going, why does my dad's name and my mum's name come on my credit file? And it's, oh, they're actually linked because I still live with them. That was I was like, why are they here? And that sort. So yeah,
that's one of the things which I think, when I first sort of started to understand this a few years ago and started to get my head around it, I think, that was one of the things that surprised me. I think was both the kind of the range of different types of things on, that appear on your credit report. So stuff like your mobile phone contract, or if you pay your bills via direct debit, that's all showing up on your credit report. So it's not just, loans or credit cards, not just things that you'd kind of traditionally think of as borrowing. It's any kind of debt or any kind of money that you owe to anyone, whether that's on your mobile phone or in anything else. I think, the other thing that was quite surprised me, to be honest, Anthony, was these companies are quite good at reading between the lines, aren't they? So I think, even you can play by all the rules, you can pay all your bills on time. They're still going to be looking for signs that you might be struggling a little bit, or you might be a little bit overcommitted. So it's worth saying some of the ways they do that.
Yeah, no, definitely. I think, and you sort of touched on a good point there, because even, you could be 100% paying everything every month. But if you've got a current account in the UK, 9 times out of 10, that bank has registered that you've got a current account with them on your credit file. I never knew that. I remember I opened a Monzo account and I was like, why has that come up on my credit file? I haven't applied for credit. I don't have an overdraft. So yeah, so just touch base on your first point. It is, I don't want to say it's always about lending. Yeah, you're very correct that, your direct debits, paying, your monthly direct debits, it's recording a financial footprint of yourself, which leads into when borrowers are looking, they will read between the lines. If you're really good at paying your phone bill by direct debit, but you've got your gas bill that's got on there and you haven't paid it, they're going to read between. They're going to look at, well, actually, he's really good at paying. His direct debits go out every month, but every month he's going £10 in his overdraft. They're going to read between the lines. As I said, lending conditions with every borrower is different, but them factoring in your credit file, yes, they do look. It isn't just based on a number. They will read between the lines, and they will look at your financial utilization overall is good, but we've actually seen that your payments could have been better here, and here. And 9 times out of 10, they will give you information on the reasons why they are unable to borrow or give you credit in that circumstance.
So if that's all starting to sound a little bit scary or complicated, don't worry. We're going to come on in a couple of minutes' time. We're going to talk about some of the practical things that you can do that might be helping or hindering your credit score. But before we do that, I just wanted to talk briefly about. I think we've gone straight into talking about important credit history and things like that. I think it's just worth reminding ourselves some of the ways in which actually why having good credit can be important and the difference it can make in our day-to-day lives. So I think there's the obvious one, isn't there, around if your credit's not good enough, you're going to be less likely to get certain types of loans or be eligible for different types of credit cards. But there are some other ones that perhaps people haven't thought about. Is that right, Anthony?
Yeah, no, definitely. I think looking at credit, I think I can only go on my experience, and I don't want to say to people, this is what happens to everyone. As in my late teens, early 20s, I was given credit, didn't really know what it was for. And then sort of looking as I got older, I was like, what's actually important to me? How important is it that I'm actually doing this? Because long-term, I've got a long-term financial goal, and how am I going to get there? So it is important to have credit, and it's important to have good credit, but it isn't the deal and endo if you don't have credit. You can be worked on. And I think you're sort of looking at, I was applying for a mortgage, and it was, well, I couldn't do it for the first year because I had to look at my credit. And I looked at that I had silly things on there that actually I didn't have my phone bill on there because it was a Rolex. And now that's on there, and that's improved my credit. I've looked at my utility bills, and, I think with the UK as well, especially with, the crisis that we're all going through now, I think having good credit or having a financial goal and looking at what we can do with credit and why it's important is always going to help. I think one of the ones that sort of touched base recently in the last year or so is employment. I think, some companies now are credit checking before you start. That's part of the initial service of, they might do other verification checks and referencing, but one of them that has appeared recently in the last couple of years more and more is employment. Your employer might do a credit check on you.
Yeah, we came across this one, didn't we, actually, with some of our members, so for example, if some of our members who work in the armed forces or security, obviously in those kind of roles where sort of, there's concerns around security, that whether you might be vulnerable to sort of, bribery or things like that. Actually, it's really important from the employer's perspective to do that credit check to make sure that you're not having financial problems, because from their perspective, if you are behind on your payments, if you have had repayment difficulties in the past, from their perspective, that could make you a kind of a riskier employee and more susceptible to things like bribery. So if you do work in a sort of a sensitive area like that or things like that, it is worth checking your sort of checking your employment contract and things like that, because often, as Anthony says, employment can it can have an impact on like in the armed forces, for example. There are certain roles, certain promotions that actually are going to be ruled out if you've had credit problems in the past. So worth thinking about. I think just but just to put everything into perspective, I think it's also worth saying that a lot of hardly any of us have got perfect credit. I think it's the reality is that everybody has got a financial history. We've all been through things. We may all go through things in the future, and at the end of the day, different providers will be catering for different groups of people and different risk levels. So in most cases, you'll find somebody that's able to, you'll be able to get a credit card or something from someone. But I think what one of the reasons why good credit is important is that the better you can get your credit score, the more options that are going to be available to you, and probably the better deals that are going to be available to you. So it's not a question of sort of yes or no, or good credit or bad credit. It's about taking control of your credit score and trying to improve it so that you've got more options and potentially access to better deals.
Yeah, I think that's key. I think, one of the conversations that I have quite on a regularly with members and, going through hardship, and is it going to affect my credit score? Why is it going to affect my credit score? They're questions that we get asked by members, but, you can also ask yourself and go, well, actually, I'm going to try and improve it. And how can I do that? And I think doing this and having a conversation and, having a real conversation and going, well, actually, yeah, my credit isn't the best. How can I improve it? And I think these factors come into play of going, well, actually, yeah, my credit's not the best. What can I do? Right, I'm going to do this. I'm going to take a financial goal, plan, budget, whatever whatever's your preference, and see where you can go with it.
Yep. And I think, there's a risk, isn't there, that, you get into a situation and say, well, I've got terrible credit. I'm always going to have terrible credit. That's just how it is. Certain options aren't ever going to be available to me. And it's tempting to give up. And, but actually, I think, in every situation, there are going to be things that you can do. And, maybe something you need to work on. But over time, credit can improve. And I think, there's one of the ways that, as a credit union, one of the things that actually credit unions such as ourselves are good at are working with people from a range of different backgrounds in order to do that. So I just wanted to sort of touch very briefly on how we use your credit information at London Mutual, because I think particularly with some of the more high-tech lenders or newer lenders, it can sometimes be a bit of a case of computer says no. So the way their process will work is that you type all your details into the application form, it will run a quick credit check, and then based on the credit score by itself, it'll either come back, the robot will come back and say, computer says yes or computer says no. And if you come from a relatively straightforward background, that can be often be a good thing, because it means that you can get a decision right then and there nice and quickly. I think the way we do things at London Mutual's a little bit less high tech, but probably a little bit more flexible, because I think credit reports, we are going to look when you apply for a loan with us. We are going to look at your credit report, because it's in our interest and yours to understand whether you've had problems in the past, what kind of problems you might be experiencing at the moment, and ultimately whether or not it's going to be right to give you a loan or not. But I think the key thing here, and the key message I wanted to get across, is that unlike lots of other lenders, as a credit union, it's one, but it's not the only thing that we look at. And actually, because all of our applications are being looked at by a real person, it means that we can take a broader view on things and look at things in a slightly more rounded way. Anthony, obviously, you're neither of us are from the loans team today, but we've got it's fair to say we've got a fair bit of experience between ourselves in this. Did you want to talk people through some of the factors that we do consider when assessing a loan application?
Yeah, no, definitely. As I said, I'm not from the lending team, but it's something that we do pay quite close attention to, especially with members rescheduling loans and stuff like that. And I think one of the thing that comes across quite often when having a conversation with someone is affordability. And I think that word's quite scary when we're looking at credit, because we're going to check your affordability. We're not just checking your credit score, as Ben he just said. It's not, because you've gone over 500 points or you're not between 500 and 700, we don't automatically say no. Obviously, we do have factors that come into play. The one good thing about that, what we consider, is your credit history, 1/3 rule, the affordability, and your financial behaviour. For me, the way it works, and I think the credit for us that we go at is we do look at your affordability. We look at your patterns. We look at making sure that if you took this now, is it going to help you in the long term, or is it only going to help you short term? And I think getting around that, having that conversation with you, is always hard, but don't be scared about it. Don't be scared that actually when someone's asking, about your affordability, and when we're looking at your affordability, we're checking your financial behavior, for instance, I think if somebody looked at my credit score now, they go, you know, I spend a lot at Amazon. And I was like, sorry, that was the pandemic behavior. And it's that sort of thing that comes into play here. And I think the real good thing about us, we have a personal touch with that, you know, it's not an automatic person saying no. It's a loan panel, and that decision comes not just from one person. It's a contribution of, actually, guys, I might not give you, one person might not think it's the best, but then somebody might see something different and go, look, actually, we can't grant you the initial amount that you requested, but we're going to work with you and do this, and we're going to help you grow and help your financial situation over the next year. So yeah, we definitely take a more, I wouldn't say softer approach, but we take a more balanced approach to lending, and, you know, we do take you into account.
In lots of ways a bit more thorough, to be honest, than a lot of other lenders as well. So if you're interested in this topic, it's worth saying that we covered this in a lot more detail in a session earlier in the year, the lowdown and lending. I think that was that February or March. So yeah, check it out on YouTube. But I'm keen to make sure that we've got enough time for questions, so we'll keep on moving on. I think we've already covered some of this stuff, but just to recap, Anthony, what are some of the ways you can keep track of your credit score?
Yeah, credit score, as I said, is very easy these days and age. You see the adverts. If you type in your local app store, anything, type in credit score, you'll get a number of ones that come up. The commonly used ones are Credit Karma recently. That's in the last couple of years. That's come a bit up. Experian, they also run a free platform through ClearScore. And Equifax and Credit Club. The only good thing about these is that the ones that are free, they do offer other services. So if you are looking for a financial goal and you think you need a thing, they do cater around service packages for individual people to cater to your needs. And one thing I will say, checking your credit score does not affect you in any way possible. It's a very common question that I get here of, oh, I haven't done that because I'm scared if I go on ClearScore, you're going to report that I keep checking my score. No, you can check your score every single day, or it won't change. It only changes every 28 days, but you can check it as many times as you want, and it will never change. It will never affect you in that sense.
And I think that's a really important one there. I think, I can't stress this enough. If you've recently been turned down for credit, if you've had a loan application or credit card application or something like that turned down, the single best thing you can do at that point is just to take a deep breath, go onto one of these websites, take a look at your credit score and try and understand some of the reasons why. The mistake people will often make is that they'll try again somewhere else, try over and over again. Applying for credit over and over again may well hurt your credit score. Checking what your credit score is won't. So taking that pause, taking that deep breath, trying to understand the reasons why you were turned down. Maybe if you're able to, leaving it a few weeks or ideally a few months before trying again. All of those things, good stuff to do. So just to kind of wrap things up, Anthony, I just wanted to end with a bit of a summary about the things that are likely to help and likely to hurt your credit score. So I don't know whether you want it to be good cop or bad cop today, and let's start with the things that are likely to help.
I'll try and be both. No, I'll be the good cop. I think, I won't go through them all, but I think one of the key ones for me is if you are in financial difficulty, or even if you think you are, but you don't, or you just don't know, speak to your lender. Your lender will have several options to help you. Whether it's big or small, they will give you advice on what they can do. And if they can't do anything, they will give you a number of companies that will be able to help you, a number of charities that will be able to help you. So for me, something that I always do in the position that I am in the business is, if you are experiencing financial trouble, or you think you are, or you're going to be, speak to your lender first. That's always for me, it's always good. I am going to say that ahead of collection, so I'm always going to speak to us first. Checking, as we said, check your report regularly. Keep your address up to date. most of the times, if you are moving, I think with me, I've rented for most of my life, and when I never checked my credit score with them, I was like, oh, it's missed. That address is not on there. Keeping your electoral roll up to date is always good.
And you do that just by going. You can do that just by googling "register to vote," isn't it? So it's just on the government website.
Register to vote.
Takes about 30 seconds, and you just literally fill in your details and register to vote. So we can send the link around for that. But takes 30 seconds, maybe 2 or 3 minutes. One of the simplest things you can do to improve your credit score is making sure that you're on the electoral roll.
Yeah, I think that's sort of they're the three for me that actually, if you're going to pick out of this list, that actually we can all do very quickly within a couple of minutes. It's we can make them changes. And the obvious one in the room is pay your bills on time. That is not always easy. I couldn't sit here and say to everybody, pay your bills on time. It's an obvious reason.
Easier said than done, isn't it? Yeah.
Easier said than done. Life gets in the way. Where let's be realistic about it. There's been many times throughout my life that I've gone, I can't afford this month, but I've got to move it here.
That's where the second point's really important, though, isn't it? If you're having problems, or think you might be having problems, or at risk of having problems, actually, the sooner you can get that conversation started with the utility company or the bank or whatever else, the more options, as Anthony says, they're going to have to be able to help you through that period.
Yeah, definitely.
So in terms of sort of the downside of things, stuff that's likely to hurt. So I mean, the obvious one is obviously missing or being late with payments, and we've already talked about how they'll be looking for signs that you're perhaps a little bit desperate for credit. So applying for loans over a short period of time. From a lender's perspective, that says, oh, this person looks a little bit desperate. So it's a little bit back to back to your school days, and with the sort of a little bit like the dating game. But if you look a little bit desperate, that can often make you less attractive to lenders. I think the other one which often people miss is that again, following that whole sort of desperation thing, but actually if you're regularly using more than 40% of the kind of the credit available to you, again, that's starting to look a little bit desperate. So for example, if I've got a card limit of, I don't know, £1,000, and I'm regularly going right up to my limit, I'm regularly going up to £99 or even over it, again, that's going to be a sign to a lender that actually you're struggling to make ends meet, you're needing to use all of the credit available to you. And again, that makes you a little bit less attractive and could hurt your credit score. And so really the trick, and I appreciate this is often easier said than done, the trick is to have higher limits on, if you've got a credit card or an overdraft, the trick is to have higher limits than you need, or that you're ever likely to use. Because actually what that shows is that from the lender's perspective, they've given you a very generous, very high credit card limit. So if you're lucky enough, you've got a £10,000 credit card limit and all the rest of it. That's not an invitation to go out and spend 10 grand on your credit card. Actually, what they're looking for is somebody that can be trusted with a very high limit, but who's only going to use a relatively small portion of that. So if you trust yourself, if you've got the self-control, having higher credit limits than you use day to day, again, is something which is going to positively help your credit score. And equally, sort of getting high into your limits is going to hurt your credit score. Anything else on this one, Anthony, before we go into questions?
No, just on that point that you said there about having your limits. Quite a lot of now credit cards, if you are taking credit cards, put a cushion in place, ask them to put a cushion in place. You can set alerts up that, if your limit is 500, that when you go over 40% or 50% of your balance, you can get an alert. So it's actually, most companies have them features. You just got to ask, and they are on the app. So that's always a good handy thing, just on the side note, to say, what can we do?
Brilliant. Well, I think that's plenty of talking from myself and you, Anthony. So
definitely.
What we'll do now is we'll go in as usual. Be great to get your questions, comments, feedback on today's session. If you have got a question for myself or Anthony that you'd like us to answer, please do go ahead and type your questions to the chat box now. as normal, we're looking for questions and comments specifically on the topics covered in this session. So if you do have kind of individual questions about your account with London Mutual or stuff that's only related to you, you can email that instead to feedback@creditunion.co.uk, and we can take that one offline. And as normal, we can't give individual financial advice. Everything that we've covered here today is sort of general things which apply to everyone. So if you're unsure about what's particular approach or particular course of action is right for you, you should always go and get some independent advice on that before deciding whether or not to go ahead. So in terms of some of the questions so far, got a question here from Terry Laurel, who wants to know, can employers do a credit check without your permission? Anthony?
No, they can't. Nobody in the UK or any company, employee, or any financial institution can do a credit check without your permission. You have to consent. I will say one of the biggest things that, whether it's lending or an employee, is check your contract, check your terms and conditions. I've been definitely that person that gets a 40-page document that says, here you go, we've accepted your credit card. And at the end, I haven't read that, page 45, it says we are subject to credit checking every year or something like that. So yeah, I would just say no one has the right to do it without your consent, but do check your terms and conditions, because if you have signed something and not read through it all the way, there could be a clause in there that there are certain situations or certain points in the lifetime of the contract that they're allowed to check.
Some really good questions coming in, and quite a lot of engagement from people this month, which is really great to hear. Next question from West London Mission St Luke's. Hi guys, thank you for joining us today. A bit of a shout out to them. Question from their end is, does GDPR apply to sharing people's credit history?
Do you want to take that one, or do you want me to?
No, I can do that one. So yes, it's personal data, and the GDPR covers all personal data. So as Anthony says, a lot of the stuff is usually covered it has to be covered in the terms and conditions of the person carrying out the credit check. So they can only carry out a credit check on you for the purposes, for the reason that you originally carried out the credit check. So if they've told me that they're going to carry out a credit check on me in order to help me apply, if I'm applying for a credit card and I've asked them to carry out a credit check for that reason, they can only use that data for that particular purpose. So they can't then keep that data and use it for other reasons or share it with other people or things like that. So as Anthony says, worth checking the terms and conditions on this. But yeah, under the GDPR, you can only use data provided for the purposes that it was originally given, if that makes sense. Yeah. So they can't carry out a credit check for one reason and then use it for another reason. But again, often there are clauses in the terms and conditions that give them a little bit more, little bit more control than perhaps we would imagine or like. Next question from Liz. Liz says, I've been a guarantor for someone, and this person, after making several payments, ran into trouble. The loan company insisted on me that they'd take the payments, and they kept warning that this would affect my credit. The person did eventually pay back the loan. What are your thoughts around guarantor loans, Anthony?
So I'll be honest, and when I was quite younger, I had somebody be a guarantor for me. For me, it worked. It worked with that situation and that person that I knew. Overall, lending with a guarantor, most lenders will look at you and go, if that person can't financially do it themselves, they wouldn't use a guarantor. Biggest concerns around guarantor or being a guarantor, make sure you read that terms and conditions, because yes, they are right. There is probably a big clause in there that, if somebody stops making payments, you're a guarantor that you're going to pick up the full foot on that. And then if that loan does go delinquent, you then will be looking at either it going to court, and because that you've co-signed, basically, your name will be on that document as well. I think,
yeah. So when you become a guarantor, you're effectively, in a similar legal position to the person actually borrowing. You're legally responsible for that loan, as if you had borrowed the money yourself in many cases.
And that doesn't go on your credit file. It doesn't show that if I'm a guarantor, for instance, for Ben, it wouldn't show on my credit score, on my file or my credit score, that Ben's repaying back monthly. it would just show on Ben's. But if it went delinquent and it went to a CCJ or any form of judgment, it would then that would negatively affect me, because that will show on my report as well, because I'm co-signing that I've agreed to help pay if this goes bad.
Interesting one from Diana here. Is your credit score affected if you close a credit card account you no longer use? So around closing accounts. So I think, I've got an understanding on this, but you might correct me here, Anthony. My understanding is that actually in some cases, closing an account that you no longer use, actually, it may, in the grand scheme of things, it's not going to make a massive difference, but it may slightly reduce your credit score in some cases, because as we've talked about, one of the things that lenders are looking for is, how credit worthy is this person? How many other companies have offered this person credit? So the more credit you've got available to you that you're not using, the better in terms of your credit score. So actually, by removing some of that credit available to you, by closing the account, that might slightly reduce your credit score. Is that your understanding, Anthony?
Yeah, definitely. It comes back to that utilization word of what are we utilizing on your credit. And if you've got 5 credit cards, say you've got 5 credit cards, they've all got £1,000, but you're only spending on one, and you decide to close the others, it's going to drop. Your utilization overall is going to drop, so that will have an impact on your credit score. For instance, depending what the value is of your credit score, and the value of your individual account on there that you decide to close, it will be, every lender will have different terms and conditions, but I will say it does normally have a negative effect, but it's not a long-term effect. It wouldn't be, because you closed a credit card that you don't use a year ago, that isn't going to be affecting you before that reason a year later because you closed the card. Yeah. It's more pretty much within them first 3 months of closing it. I think it's going to say.
And in terms of sort of, making a decision about what's right for you in that situation, I think, there's obviously the reasons for closing the credit card. So actually, if you're closing the credit card because actually there's, you've just managed to pay it off, and to be honest, you don't trust yourself to stop spending on it, then actually probably in terms of protecting yourself and protecting your credit score in the long term, you may be better off without that credit card account. On the other hand, if you're quite happy to leave the account open but not to spend on it, probably strictly speaking from a credit score perspective, that's going to be the better thing. But as I say, it's different strokes for different folks, and it's going to be it's a case of deciding what's best for you and what's going to be, because ultimately, the best way to keep a good credit score is to avoid getting yourself into more debt than you can comfortably manage.
Definitely.
Next question. From St. Luke's, how much does moving house often affect your credit score? So if you sort of move fairly regularly.
Once again, it goes, bit of a broken record there. It goes back to the lender. For instance, if you do look, most lenders ask for, if you've moved within 3 years, they would like to know your previous address. It does affect, if you move every single year into a new place, you're going to be reoccurring credit at every address that you move. That's going to come with you. As I said, no, most of the times it's last 6 years they want to know. So if you've moved within the last 3 years, they're going to want to know where you were the last 3 years before that. So that's a rough guidance, or most lenders would look at. It won't affect it in the sense of they won't be able to give you credit normally. It's normally just understanding what your pattern is and what your history is. For instance, I've had many cases over the years, not here, that people have taken out a loan at one address, moved to another, taken out another. So that's it. It's a protection for them and a protection for you to make sure that, your records are up to date. So yeah, it shouldn't have a massive overall effect, but lenders will look at if you have been moving regularly, and they may question it.
And I think the sort of the other important thing is that sometimes life is life, and we haven't got a great deal of control over how often we move house. But if no matter how often you move, can't stress it enough, make sure that all of your accounts are up to date. Make sure that you're contacting all of your utility companies, card companies, banks. Make sure they've got your latest address all the time, because actually that, more than how often you move house, is going to be what makes the difference. It's better to be upfront with them about what's going on and how they can contact you, rather than, you know, perhaps sort of being reluctant to share the fact that you've moved recently. Another question here from Terry Laurel. If you refuse a credit check, can it affect your employment status? So we're probably straying a little bit here into the law around kind of employment. So I think, you know, before answering this one, I would say that probably best thing to do here is to either talk to your union rep or a kind of you know, somebody qualified around employment law. As we've already talked about, it's not possible to carry out a credit check without your consent. But my understanding of where things stand is that employers can require you to carry out a credit check as a condition of employing you. So you know, they have got the right to sort of to turn you down for a job if you're not prepared to go through a credit check. That sort of, you agree with that one, Anthony?
Yeah, definitely. I think Ben makes a good point there. Employment law is different. Speak to a credit union, if you have a union rep, a HR representative, anybody at your company, you can speak to, or even if you're applying to a job, you can ask the reasons why and what's it used for. You know, that's a freedom of information that you can ask why. You have to consent, and they will have to tell you what they plan to do or what their decision is with that. But yeah, definitely what Ben said, reach out to, you know, a union rep or somebody in the HR department in regards to the status of what they can do, and read your T's and C's, read your contract.
And I think, you know, the thing to say there is probably kind of being, you know, a bit of transparency around the reasons why you might be reluctant, or, you know, understanding from them the reasons why they're asking for it. A little bit of dialogue there can often go a long way, because ultimately, often one of the reasons why companies are carrying out credit searches is because they want to get the full picture of you. And so a bit of openness and transparency in some situations can be what's needed there. Good question next from Gillian, and it's probably a topic which we, you know, if we'd had a bit more time, we should have gone into a little bit more detail on, Anthony. But the difference between hard and soft credit searches and how those can kind of impact your credit history.
Yeah, definitely. So a soft search is made by a company that basically won't affect your credit scoring or your credit file. It's still recorded. It will still show that a soft search has been carried out. 9 times out of 10, if you've got an app with a credit, you know, with a credit agency, it will say a soft search has been carried out. This doesn't affect the credit file. Hard search do. That is the visible check that a credit search has been done on your name. That will show the amount that you've applied for, who you've applied for with. That is also used with other lenders. So when people are then searching again, it will come up that I've been rejected by London Mutual, so I'm going to go to Barclays. Barclays will see that there's a hard search been done by London Mutual 4 days ago or a week ago. So hard searches do. And sometimes companies will do a soft check with you at the beginning, which you will consent to. And then they will say that we can now do a hard search further into the application of whatever the product or service that you're lending from. So yeah, there is a very big difference between a soft search and a hard search. And just remember, soft search doesn't affect your credit file, hard search does. And if a soft search is carried out and you've gone through with that product, that will turn into a hard search.
That's useful. Hopefully that makes sense to everyone. Another question here from St. Luke's. Fuel poverty has an impact of people. Will that affect you when applying for a loan? And I guess that's sort of both with ourselves, but then also I guess in general as well.
Yeah, I think, let's be real about the current situation. The cost of living is going up with everybody. It doesn't matter who you are, cost of living is going up. Applying for any form of loan or any form of credit at the moment, or borrowing, most lenders are taking the approach of what's factoring in the next 6 months and what the next year will be like. So yes, it will affect you applying for a loan but it's, once again, each lender will have a different criteria of what they expect from that person who's applying for that loan. I think one of the things that is really good, I know that we do here, it's a conversation. You know, if there's a reason why your fuel or anything or any of your expenses have gone up, you can explain that to your lender and it can go from there. Would you say that's pretty much a fair point? I wouldn't say
Yeah,
there is.
I think one thing I'd add on there, Anthony, is that I think that, you know, like lots of lenders, you know, one of the things which we've been doing over the past few months and will continue to do for as long as this kind of cost of living crisis is going on is what we've been doing is that as we've explained, you know, one of the things we'll sit down and do when you apply for a loan with us is we'll do an affordability assessment. So we'll look at all your ingoings and outgoings to make sure that those repayments are going to be affordable to you. One of the things that we've been doing in light of the cost of living crisis is stress testing that a little bit and adding a little bit on, because what we don't want to do is we don't want to give you a loan which is affordable for you right now, but then when, you know, and I'm afraid it is when your energy bills go up later on in the year, that suddenly squeezes you into a position where you're going to really struggle to repay the loan. So the question that we're asking at the moment is not just, are these loan repayments affordable for you now, but are they still going to be affordable for you in 3 months or 6 months time? And you know, and I think, you know, unfortunately in some cases that means that probably, you know, in some cases it feels like our decision making's become a little bit more strict, or that we're having to say no to people in a few more occasions than normal. But I think really, you know, that ultimately is about protecting our members, and then also all of our other members, to make sure that actually, you know, we're not getting people into situations where they're going to struggle, because actually that's in nobody's best interests. So yeah, that's kind of what we're up to at the moment. I'm aware it's sort of 1 minute past 2, so we're probably going to have to sort of wrap up around there. I can see a couple more questions that we'll finish up, if it's all right, just with 2 more from St. Luke's and from Liz Williams. So the first from St. Luke's: what's the best bank for earning interest on your credit account? That's quite a general one, and probably sort of doesn't directly link into the topic of today's session. I think the thing to say is that probably with interest rates where they've been for the past few years, you're not going to get a huge amount of interest on your savings wherever you put them. That is starting to change with the cost of living crisis. One of the sort of the few upsides of the cost of living crisis, if there are any, is that banks are going to have to start offering higher rates of interest. So that's starting to happen. So on some accounts, you'll be able to get between 1% and 2% of interest. So it's worth sort of googling that, shopping around. Money saving experts really good on this.
Yeah.
But I think the thing to say is that overall, if you're looking to earn loads of interest on your savings, probably, you know, bank accounts aren't the greatest way to do that at the moment. But again, it depends on your individual view of risk. We'll just wrap up today's session with a question from Liz. If you've applied for a loan or credit and you've been refused, how long should you wait before applying to other companies? Because obviously, if you know, as we've talked about, if you repeatedly applying, that's going to have an impact on your credit score. Any kind of rules of thumb for us there, Anthony?
It sounds a bit weird. I'm going to say it all depends. But for me, if you're looking for a loan and you've gone to the first company, it's been rejected, there is no harm in trying another company. I would leave it there. That would, for me, and for, you know, if as a lender, if you're seeing that somebody's applied for 7 loans in 1 month, it's going to come back to that point that, you know, that you're desperate for credit, and then there's another reason, why are they desperate for credit? Why do they need this credit? I think the good thing about this day and age is you can look around without applying. If you are going to apply for loans, see if there's some lenders that do a soft search first, because, you know, that's a little bit easier on you. I think one good thing that we've sort of touched base on is that a lot of these apps, Experian, ClearScore, and Equifax, the credit reference agencies, they actually most of them offer free services and free comparisons. So they sort of tailor it already around to your credit score. So you can I would definitely recommend going onto an app, having a look, and see if, you know, there's any improvements that can be done, and actually see what they can offer you. See if they can offer you something, instead of going out applying for a massive several loans in 1 month, I think it'll make a really big impact on your credit score.
Brilliant. Well, I think we're about 5 minutes over, so I think we're going to have to wrap up today's session there. Thank you very much, everyone, for all of those questions. I thought that was a particularly good Q&A session.
Yeah, definitely.
And really enjoyed answering some of those.